Next is problem number 11. Prepare a balance sheet of White Limited as on 31st March 2018 as per Schedule 3 of Companies Act. We have all the items again connected to only the balance sheet. No need to prepare income statement. So here you find general reserve, liability, 10% debenture liability, balance in statement of profit or loss. When you are prepared statement of profit or loss, you know what you get after tax. So this is the balance of statement of profit and loss. This is the one. This becomes a surplus. So reserves and surplus, under that heading, this surplus will come. We'll take it there. Next, depreciation on fixed assets. So fixed assets value will be there. You can see the next one, gross block. Gross block, nothing is told. Now it is connected to fixed assets itself. That tells that gross value of fixed asset. Gross value means before depreciation is done, the value of fixed assets is called gross block. So I'll show you how to work that. So remember, gross block means connected to fixed assets. The value of fixed assets before depreciation is called gross. After depreciation is called net. Net block. Net block means after depreciation. Next, current liability is a liability itself. Then preliminary expenses. Preliminary expense is a loss. So loss comes under other non-current assets. Other non-current asset. So loss is an asset. Profit is a liability. Profit to be paid to the shareholders by the company. As the company has to pay, it is a liability. Loss to be collected from shareholders. So it's an asset for the company. So preliminary expenses are those expenses incurred in the beginning of the company to start the company, to create the company. So before company comes into existence, expenses done is called preliminary expenses. Next, 6% preference share capital is a liability. Cash and cash equivalent is an asset. So we have here 9 amounts, 9 items. So we have to prepare a balance sheet for that. So in the books of, you have a name here, White Company. So I have taken that over here in the books of White Company as on 31/3/2018. You can see same page, question number 11. Okay, question bank 11th one. So I have a pro forma with me. I have some notes here. 5 notes I have done for your easy working. Even though 9 items are there, I have done 5 notes therein. 3, 4, and 5. So let me start working now from the beginning. First is general reserve. I told this comes under reserves and surplus. So I have done note number 4 here. Under that I will write general reserve amounts to 3 lakhs. Next, 10% debentures. Straight away we can take it to the long-term borrowing, or you can take it under a separate heading as I have written here for you to understand. We have done in many problems. Long-term borrowings, debentures, 3 lakhs. Next, balance in statement of profit or loss. As I told, it is a profit after tax. In the income statement, it is called as surplus. So Profit is called as surplus, another name. So I'm writing there that particular item. They are not told is a profit or loss, but is understood. Balance in statement of profit and loss. Credit balance that amounts to 1,20,000. They are supposed to give credit or debit. If nothing is given, it is credit. That is, credit means profit, debit means loss. Please remember this. Very, very important for the examination point, from the examination point of view. If you don't remember, it becomes a problem for you further. So you have to remember debit and credit balance is part of it. Very, very important. So let me move on further. Depreciation on fixed assets and gross block. So here I told depreciation amount I will take here. Note number 3, I have done here. You can see gross block, depreciation, net. Gross block minus depreciation is net block. I have not written minus. So you have to understand the way I am going to put it across for you. So gross block is 9 lakhs. Then depreciation is 70,000. So we have to write net.
Sir, can you tell the formula?
Yeah, I have written here. Fixed assets, that is gross block, less depreciation, that will become net block. So 9 lakh minus 70,000 is 8,30,000. So for your reference, okay, you're getting confused. I'll write less depreciation. Is it okay now? So
Yes, sir.
gross less depreciation will become net block. There's a one. Next, current liabilities. So we can take straight away into the balance sheet itself. Amount 2,50,000 in the heading only, because we don't have any detail. So for the heading only, I am writing 2,50,000. You can see here for 2,50,000, I have written for current liabilities total. We don't know short-term borrowing, the other things. So I have written for that itself. Next, preliminary expenses, 30,000. I told it is going to come under other non-current asset. It is a loss. Preliminary expenses is a loss. It comes under other non-current assets. Next, 6% preference capital, 5 lakhs. It comes under share capital. But 1 second, do we have equity capital? We have to check here. Okay, we don't have equity capital. Every company need to have a equity capital. Without equity capital, they cannot have a preference capital. So cut preference capital and make it as equity share capital. Change that to equity share capital. Company cannot be without share capital. So it is a must and should to have equity capital. So without that, not possible. Printing mistake, make it as equity share capital. Next, cash, 6,10,000. Straight away, you can enter into cash equivalents in the current assets as 6,10,000. So I have completed all the amounts over here. So I'll go for balancing, totaling all the headings. 5 lakhs capital, other current assets, 30,000. 4,20,000 reserves and surplus, and debentures, that is a long-term borrowing, 3 lakhs. So 5 lakhs equity capital, I will transfer to balance sheet from note number 1. Note number 2 is other non-current assets. Note number 2. Then 8,30,000 is the tangible assets. Note number 3. Note number 4, reserves and surplus. Note number 5, long-term borrowings. So all 5 notes total I have taken over here. We'll go for totaling. 3 amounts are there on the liabilities side. So add up 14,70,000. Similarly, you have to add the 3 amounts in the liabilities asset side. If you add that, even you will get again the same amount, 14,70,000.